Good afternoon, I'm Jennifer Christian and I work as a portfolio specialist in the investment management team, and I'm going to provide you with a brief overview of this week's market summary. In the penultimate week of the UK election campaign trail, following a somewhat stagnant TV debate on Sunday, which Boris Johnson and Jeremy Corbyn did not attend, it was no surprise to see Labour leader Jeremy Corbyn target the NHS as a key battleground. And so, ahead of the commencement of the NATO meeting in London at the beginning of the week, Corbyn issued a letter to US President Donald Trump, asking him to revise the US negotiating objectives for a post-Brexit trade deal. However, from a global perspective, arguably the most significant event this week was the meeting of NATO in London. Despite the focus of the meeting supposedly meant to be on defence, the proceedings were dominated by global trade and indeed US demand for member countries to pay more for defence. With that in mind, the meeting was largely non-progressive from a defence standpoint, with loose agreements in terms of how NATO funding should be split. However, with Donald Trump stating that he was happy if Chinese trade negotiations waited until after next year's US presidential election, and with him not mentioning the intended plans for the final round of tariffs on Chinese goods, the market was largely left confused as to what this meant actually for trade. However, what is clear is that with the US election campaign trails beginning to pick up in place, and with the Trump administration having been anything but successful in implementing many of the intended election promises from 3 years ago, Trump will not likely want to rock the boat. Interestingly, Trump pushing his expectation of a US-China trade agreement until after next year's US election, apparently softening his stance, it came on the very same day that the US House of Representatives approved legislation that imposed sanctions on Chinese officials regarding human rights issues. So with consistency not being Trump's strong point, headlines can often mask true intentions, and indeed the true impact to an economy. Elsewhere, we saw Christine Lagarde, head of the ECB, testify at the European Parliament. The message was clear and consistent, stating that climate change policy and inflation are key, with Lagarde reinforcing that current monetary stimulus, whilst unchanged, is to be reassessed and that fiscal stimulus could be key to driving inflation to the target levels. This suggests the rate-cutting environment within the EU is all but over. Markets seem relatively agnostic of Lagarde's words, with the focus set firmly on the NATO meeting. So the rolling out of any proposed changes could see a positive impact on the European markets. Thursday saw Japanese President Shinzo Abe announce a 25 trillion yen stimulus package, with approximately half dedicated towards 3 pillars: disaster rebuilding and safety, overcoming economic downside risks, and sustained economic vitality following the Tokyo Olympics. This is a step in the right direction for a country whose modern policy has centred on monetary policy. And finally, in terms of data, China released its PMI data coming in well ahead of expectations, suggesting manufacturing in the world's second largest economy is in better shape than many expected. UK PMI data also beat expectations across the board, and European GDP came in line with expectations. Friday also saw the release of US jobs data, and whilst headline unemployment decreased, the participation rate also decreased, suggesting there is still some noise in the data. That being said, there was a stronger than expected increase in US payrolls across the board. Now that's all from me this week, and don't forget, if you haven't already, you can also read a more detailed insight into matters affecting the markets in the email.